Hello and welcome. This is the earnings special on Bloomberg Quint. We're taking stock of Wipro's earnings. And well, it's been a mixed quarter for Wipro, at least as far as in terms of expectations, because while we have seen a little bit of a miss in terms of revenues, the profit number has been slightly higher than expectations. To take us through the earnings and what we can expect in the future, we have the CFO of the company, Jatin Dalal. Jatin, thanks so much for taking the time out and speaking to us. Let me begin by asking you about what your assessment of the revenues is, Jatin, because a lot of analysts were expecting just a slightly higher number. And in comparison to that, if you actually consider the guidance for the next quarter sequentially, what are you factoring in terms of tailwinds and headwinds?
Sure, Agam. So I would summarize our quarter one as a good quarter on profitability and cash conversion. A little slower than what we expected on revenues. We came well on both EPS growth at 12.5% and operating profit at 18.4%. But we were little slower at in constant currency minus 0.7% vis-a-vis our guidance of -1 to +1%.
Okay, so Jatin, I'm sure that renewals are an ongoing process, but in terms of the latest, what can you offer us when it comes to what sort of renewals are you seeing? Are these more short-term in nature? Because there are a lot of reports out there that there are more and more clients who are now looking forward to relatively shorter-term contracts in comparison to the longer-term contracts. If you can give us a color on that as well, and what we can expect going forward. Is this to do, to a certain extent, with a change in technology, or is this because of a little more caution that some of these clients are taking into consideration right now?
So again, it is volatile, and I wouldn't say that there is a definite trend for shorter cycle business. It is volatile because there are two axes on which we are operating. The first axis is what I will call as the new business, which is digital, cybersecurity, cloud, engineering, certainly new type of engineering that we are engaged in. And that business is indeed shorter in duration, far more consultative in its approach with the customer. And the second axis of execution is really our businesses like digital operations and platforms, our cloud infrastructure services, which continue to be long cycle, or I would say long execution cycle and long-term contracts. So there is a quarter in which what I call as TCV to ACV ratio, which is total contract value to annual contract value, is little lower, and in certain quarters like Q1, they are actually higher than previous quarters. So it is a volatile parameter based on what you are selling more in a particular quarter. I certainly don't see, except maybe a couple of places in the whole business, where there is a caution from the customer, and therefore the business which is being handed out is short cycle.
Right, Jatin, there is some slackness when it comes to sequential growth, and actually there's not sequential growth, but when it comes to BFSI, consumer business unit, or healthcare life sciences, and you and the CEO has already mentioned that this is largely a blip as far as this particular quarter is concerned. But if I just consider the kind of trends and put into a context of the horizon of the next 4 or 5 quarters, is there something that may be shifting towards the downside? Any risks that you foresee? Any caution that you're seeing when it comes to several of these verticals?
So I'll categorize all three in separate baskets. First, I would like to take away a consumer business unit. I think it was a quarterly blip. You would see the business bounce back in quarter 2 and for the rest of the year, as far as we can see. So it's one quarter blip, and we don't see any challenge on that business. The second is BFSI. As you know, we have grown ahead of industry for last 3 years. In fact, last year we grew 16%. This year, first quarter, year-on-year performance has been 11%. So there's a business which is on sound footing, and we have differentiated capabilities which gives us an ability to grow faster than the market. However, there are pockets in BFSI, especially in securities market in US and in Europe, where we are seeing a sort of slowness, and that is impacting the momentum of the business. But we do hope that we are able to find businesses in other pockets within BFSI which should pick up momentum through the year. The third one is really health, and I wouldn't say there is a market factor here. In health, there are company-specific issues which we are addressing systematically, have addressed them systematically over last 18 to 24 months, and we are hopeful for a slow and steady improvement there. But that business will take time to come back on a bounce. So these three are clearly in three different sort of trajectories of performance as we look at next few quarters.
Okay, so Jatin, in terms of margins too, firstly, are all the wage hikes in place? Will there be a little bit of residual effect which may play out in the second quarter? That's the first part of my question. And the second part is, when it comes to, your employee benefits in general, as we all know that the industry is facing a little bit of a talent crunch, which means that do you expect that in some cases you are expecting these expenses to remain elevated in order for you to go ahead and hire the right talent for the right things?
So Agam, the answer to your first question is that we have given out all the MSI merit salary increases for this year. So there is nothing really left, but there will be a residual impact in terms of 2 months impact of that, because we gave the salary increase from 1st June. So remaining 2 months impact will come through in quarter 2 on operating profit. On your second question, yes, we will remain invested in the talent, and especially in newer areas where we need to create differentiated capabilities, we will have to remain on watch out for making sure that we keep our talent retention rates high, and something that can lead to a better customer experience.
Yeah, but
that doesn't mean, therefore, that one would continue to give incremental dollars behind it. It just means that in identified areas you would remain a little more invested than what you have in rest of the business, and those areas we have called out as our big bets.
Okay, all right. And finally, a question on capital allocation, Jatin. Now that there are all sorts of questions on the buyback route. Have you guys decided anything on whether or not that may be a considered method going forward, considering Wipro has carried out significant buybacks in the past? Or are there any other methods that you may want to consider?
So we have always used combination of dividend payout and buyback in past for cash distribution to our employees, to our shareholders, and I don't see any change there. As we speak, we are in the process of a buyback where we are somewhere towards the fag end, and our intention is to complete the buyback as it was originally envisaged. We are in the process. We have filed requisite documents with SEBI, and we await their go ahead on that. And once that happens, we will complete the rest of the steps. So that's really the intent, Aga.
Okay, all right, Jatin. We leave it at that. Thank you so much for joining us and taking the time out and speaking to us on Bloomberg Quint. Thank you.